Good morning, everyone. My name is Rachel Deschelle, Senior Manager of Trading Services. I am stepping in for Kevin Horner this morning to be your host for Trader Talks, where we discuss all things markets. I am joined today by my friend and colleague, Scott Durfee. How are you doing this morning, Scott?
Good morning, everybody. Good to be with you this bright and sunny, beautiful, depending on where you are, I'm sure, Monday morning. Welcome to the new week, everybody.
Yeah, it is sunny as well here in Greenville, South Carolina. A little bit chilly, but still the sun is out. So looking forward to a great week. And we are joined in the chat by Brent Morris. Please feel free to chat in your questions, comments today during today's session. We'll kind of keep an eye on that as we go. Please also feel free to follow us all three on X. I'm Rachel CS. We have Brent Morris with Brent Morris CS, and then Scott Durfee CS, and those are kind of our handles there. And then please subscribe to Trader Talk Schwab Coaching here on YouTube and like this video if you enjoy our discussion today. But before we hop into our agenda, let's just cover some important disclosures here. So this information here that we're going to cover today is for informational and educational purposes only, should not be considered any type of recommendation or advice. Options carry a high level of risk, not suitable for all investors. We're not really going to discuss that today. But then also the paper money software application, it has some differences between the live. We're going to use that today for our discussion. So let's move through to our agenda. So we're going to start with the general trend of major market indices, kind of talk about what's been influencing the markets over the past few weeks and things to look for during this coming week. We're going to look at the various trends of some sectors, and then we're going to analyze some individual charts to look for general trends in different time frames. We're going to look at support and resistance and those analyst upgrades and downgrades that we're kind of seeing this morning. So let's move towards Think or Swim, and let's just kind of start with a look at the Dow Jones Industrial Average here. We've obviously had quite a bit of last week. We saw, obviously, we'll kind of get into with the major market averages. We had some exhaustion gaps kind of take place after some bullish gaps the week prior. We still have earnings season that continues to see some growth. It's kind of winding down here with over 90% of stocks already kind of release their earnings. And then we still have that lack of economic data just due to the shutdown continuing to place kind of uncertainty over the market and some concerns as far as that data drought. But as far as the Dow, Scott, what are you seeing here in the general trend?
Yeah, that's an interesting question because, when we look at the Dow, I'm just kind of looking at it from a technical standpoint for just a second right here, Rachel. Right now, you see not the most recent candle, but the most recent prior to that, a big hammer candle bouncing right off that 30-day moving average, which has acted as a level of support off and on for this particular index. And so we saw that hammer candle. We see a close above the low of the high day. However, we're still below this 10-day moving average. And so, we're maybe not quite getting all of the technical indicators, and I'm talking just technicals, right? We're not getting all the technical indicators yet that's saying, hey, now's a good entry point, or things are looking to maybe resume the bullish movement to the upside. But we're getting some indications that may, just technically, that may be something for us to watch for in the near future here.
Yeah, that's a great call out. Obviously, we're seeing some follow through today of that bullish reversal type candle. Obviously, it struggled with that 20-day moving average and then almost dipped down to the 50. So could be looking like this trend may be starting to repair itself. We kind of can even take a trend line connecting those highs of the recent week and a half or so, and we can see today's candles just kind of gapping up through that to maybe say that there could be a possible end to this short-term trend. Now let's take a look at the NASDAQ composite. We're going to look here, and the picture looks a little bit different, but what are you seeing here in the trend here, Scott?
Still an uptrend temporarily. Recently, though, we have had that pullback, and that's something that we need to pay attention to. We're in the NASDAQ here. I can't see that. So we are in the NASDAQ here. So, this is one that's gotten a lot of attention lately. All of the stocks in the NASDAQ, there's been the whole talk. Are they overvalued? Are we getting to a bubble? And I'm not stating that we are, but a lot of different investors and traders are starting to take that into consideration. And I think that we'll see that first manifest itself in the NASDAQ. I'm not saying that we are right now. It is different. It's a different looking setup. However, there's some big similarities there too, Rachel. If you can just zoom in on maybe the last 3 weeks or so, we can see that we have a very similar kind of pattern. Now, the candlesticks are different. That hammer pattern is a little bit above that moving average that you can see there. Rachel, what's that blue moving average that you have?
That's the 50 period.
So it's above the 50. It would probably be sitting again on that 30-ish, somewhere in that neighborhood. We do have a bounce above that. So we're looking for that NASDAQ break. That NASDAQ break is going to be fundamentally driven for sure. But there's some technical analysis here that we should be taking a good hard look at as well.
Yeah, good point there, Scott. Obviously, like for the long-term investor, that long-term trend is still intact, especially it's kind of interesting to me when traders look at those candlestick formations, and they usually place a little bit more importance on them when they form at those crucial support or resistance levels. And obviously, a great call out. That's definitely what we saw with a little bit of a bounce, quite the bounce from that 50 period moving average too. And you mentioned something else that I think a lot of people are kind of questioning right now is just what type of environment are we in? Are we in some type of bubble? Obviously, valuations are high, but the thing that kind of strikes the difference to me, if you can kind of compare this to other previous cycles, and especially like with the dot-com bubble, I mean, a major difference between that was a lot of these stocks were, I mean, obviously completely out of valuation, kind of like we're seeing now, but also they didn't have the earnings growth back then that we're kind of seeing now within some of these major groups, especially within the NASDAQ. So I think that's kind of like the stark difference there that investors and traders may be kind of paying attention to as we kind of talk about whether we're in this bubblicious type of environment or not.
You know what, Rachel, too, one more thing, and you don't need to put it up there, but if our listeners wanted to put up an RSI at the bottom on that chart, we'll notice that the relative strength for the NASDAQ is tailing off. We're below 50 on it. It's continuing a bit of a downtrend. We see some ups and downs. So the relative strength on this particular index is also falling out of favor.
Yeah, good call out there. I kind of have that below here where we're seeing, we saw those lower highs, which is obviously confirmative of what we kind of saw in this latest pullback where we were making kind of lower highs in price, obviously. But something that kind of stuck out to me during this time, even really since back in April or May, with each pullback in the NASDAQ, we're still staying in that bullish regime with that RSI right around that 50 level or so. So, I mean, the trend is still a trader's friend here in the NASDAQ. Like you said before, that long-term trend has not broken yet. So let's move to the S&P 500. I'm going to zoom in a little bit closer to that one. We have on the chart the 20 period moving average in, I don't know what's happening with my mouse here. We have the 20 period moving average in white. We have that 50 period moving average in blue, and we saw this big channel, this rising channel in the S&P 500, Scott, over just the last few months. And then we saw that breakthrough on Friday, and still that similar setup that you kind of mentioned in both the Dow and the NASDAQ with that hammer candle really residing right at that 50-period moving average, and seeing that bounce again today. So similar pattern that what we just saw, Scott, in the NASDAQ composite as well. Is there anything else that kind of sticks out to you on this chart?
No, I think you got it all. It's pretty consistent. What we're seeing is pretty consistent. When we see things that are consistent like that, that tends to, make things a little more settled for investors and traders in the market. When we see indexes that are conflicting with each other, that's a lot of times when we see a lot of, what we would sometimes term as trouble in the market. But right now, everything's looking pretty consistent, Rachel.
Yeah, that's what I'm seeing as well too. And we'll pull up a couple other ones in the meantime too, because I always like to pull up the Dow theory chart where we can compare the industrials to the transports, and I'll pull that one up next. But I will mention something kind of interesting as we kind of get through this kind of seasonal phase that we are possibly seeing in the year end. I mean, statistically, November has been the strongest month of the year as far as performance. So if we kind of like look and compare what we're kind of seeing in the market now, which could happen into year end, which we've statistically seen, since we did see that little buy the dip type of bounce here, that could give investors kind of an indication of what's possibly yet to come. Obviously, we don't have a crystal ball, but if seasonality is on our side, statistics are on our side, that could be something that traders could be watching into year end too. So mentioning that Dow theory that I just did a minute ago, I thought this was kind of interesting, Scott. We've obviously seen that the Dow transports have looked quite different from the Dow Jones Industrial Average. We saw those lower highs taking place, and then over the last just couple months here, we saw this range. And then just recently, that breakout of that trend line. So is there anything significant that you're watching here?
Yeah, can you zoom in on, maybe the last month or so of activity right there? You can see right there, that's fine. You can see that there's been a lot of consolidation, even though now, if we were to draw a line from the high across to where we are today, we would see that we're really pretty close to getting near a potential level of resistance with that upside down hammer. Yeah, right up in there, Rachel. So you can see we're getting close to what could investors and traders could see as a level of resistance. In other words, a place of offloading or selling. So I would watch that as a critical point. If and when we see that break that critical point, we may be able to get some technical indicators saying that it's a good time to enter. Right now, I would probably, even though we have some strong move to the upside, we've got a huge candle that's engulfing that bearish candle in front of it. But today, right now, what we see is the beginning of what we call a morning star. That morning star, it looks like a little bit of a doji or an upside down hammer. We'll see how it finishes out the day, because it could look completely different from that at the end of the day than it does now. But if this is the type of candle that hangs on, that's a bearish candle, and we could see potentially a pullback from there. However, now if you wanted to zoom back out real quick, Rachel, you can see that since about April, this stock has made a pretty good, or this index has made a pretty good move to the upside. But again, we're feeling some consolidation pressure right in there ever since about the first or middle of July or end of July, 1st of August. We're seeing some pretty serious consolidation. Watch for that to break.
Yeah, I think you made some really good points here. I mean, we did see just taken from today's move to those April lows, like you mentioned, we've seen over a 30% move, but still doesn't look as similar to the other indexes that we saw. So definitely this kind of range to keep an eye on here, where, like you said, if that ends up being that type of reversal candlestick, that doji or the start of that three pattern or that three candle evening star type pattern, that could be a possible critical level of resistance there, where traders may look for a possible reversal or at least a pause at that level.
Yeah, at least a pause potentially.
Exactly. So let's take a look at some other things. Let's take a look at the dollar, because obviously the dollar has been moving up over the last few weeks or so. And I kind of made some drawings on this chart with the dollar. We've seen resistance kind of up around that 100.5 level, and then support down around 96. Is there anything else that kind of stands out to you here, Scott?
No, it's pretty range bound right now. You're making the good calls. I see a short term potential bull flag developing, but again, it's so range bound. That's a pretty solid ceiling that we're bouncing off of right here. But if for whatever reason that we could see that bull flag begin to move back up and threaten to encroach that level of resistance, I think that maybe we could, from a technical standpoint, begin to see the dollar. Now we know that the dollar is not driven by technical analysis. We know the dollar is driven by policy, by other things, geopolitical throughout the world, and all of that. But from a technical standpoint, we can watch that, because once the policy and all those other fundamentals get into play, then the technicals are what's going to drive this particular index for the dollar. So again, just keep an eye on that. But again, that bull flag's looking good. You've got RSI, it's uptrending. We're seeing higher highs and higher lows on the RSI. We're in the reversal area on occasion for our RSI, but I think it's looking like it should look. I don't see anything that's scary about this particular index. A lot of people sometimes will look at the dollar and freak out and get scared because of what's going on. But I think that we're in good shape here, Rach.
Yeah, I would definitely agree with your analysis there, Scott. I mean, I think something that I've kind of been watching too, as we've seen this dollar rally from really the September lows, we've had that structural kind of uptrend there. And I'm kind of wondering if that's what's putting a little bit of pressure on some precious metals too, which we'll look at here in a second. And as well as Bitcoin and some of the cryptocurrencies as well, as we saw rotation out of there and possibly into the dollar as well. So it'll be interesting to see if we do, because we obviously saw that bounce of resistance there. So if we do see more of a pullback where this bull flag doesn't resolve higher, we could see that possible type of reversal or the stoppage of the movement going down in the metals and crypto space too. And I looked at the chat over here, and I see one of our viewers mentioned about getting that watch list. So I just shared that indices watch list in the chat there. It's full of indices, futures, as well as some breadth measures as well. So let's take a look. Since we just mentioned precious metals, we've obviously had a little bit of a drawdown in things like gold and silver, really in this space that was extended for quite some time. I mean, it remained overbought from really August 29th to October 20th. So really remaining in those strong extended levels of momentum for nearly 2 months here. I think it's interesting, though, that even with this pullback, momentum's remained strong, is still right around that 50 level or so, which is still that bullish regime, given that the fact that it's retraced. What is the percentage there? Let me kind of move this axis here. Retraced about 10% in gold so far. And then obviously today, Scott, we're seeing a big move with that gap above that 20-period simple moving average as well. Oops.
Yeah, and that's a solid move, right? When I look at gold, I just scratch my head. Silver too. I mean, this thing has just been on a rip for quite a while, and I don't personally, and I know it's happened, but I don't personally, and I've been doing this for 20 years. I don't remember. Not saying it hasn't happened. I just don't remember a rip on precious metals, specifically gold, silver too, in all that time, right? And so when we see something like this happening, especially at the index level, it's like us trying to breathe in and then breathe in and then breathe in and then breathe in and do that for an entire month or 2 months or 3 months without ever exhaling. The market has to exhale. And we're seeing this really manifest itself when it comes to precious metals, gold in particular. This is a small exhale, though. I don't see this as a reason to, freak out or anything like that. But this is just a small exhale. You can see we've got a long ways to grow. We're at what, 41? We got over 200 points or 200 handles before we hit up to that 43 where we were before, back in not too long ago, actually, that 43.98 that you've got up there, Rachel, but the very highest. But as we bounce and continue to move, we're just going to keep an eye on it.
And yeah, we've had quite some time to repair. Like you mentioned, we have a little bit more time to repair for that initial trend, just kind of in the short term here. I went to a 20-day hourly chart and really drew this kind of coil or triangle pattern that's kind of been forming a couple times in gold. Kind of another notable one is right around this area at the end of October as well. We've seen yet another one. So that's kind of telling me, and probably a lot of traders, that there's some compression here. There's obviously lessening volatility in the price of gold, and it's just kind of looking like over the last day or so, it's been kind of squeezed out of that coil there. So to the upside, that first level of resistance could be around that other old level right around 41.70 or so. But like you mentioned, this thing's a marathon, not a sprint, and it has been sprinting. So every time that we see something like this, where there's been that strong explosive trend to the upside over the longer term and shorter term, it just makes sense for things to kind of take a little bit of a breather, like you said, a little bit of an exhale to just kind of collect itself for that possible next move higher if that trend is going to continue. So let's also look at silver, because that's another precious metals that we've kind of seen here in the long term that's actually been outperforming gold as of recent. And I actually had these little drawings on the chart here. I'll zoom out quite a bit. Sorry, guys, I'm kind of fiddling with the time frame here, but we saw I think a bigger drawdown in silver as well. If we just kind of look from highs to lows of the last few weeks or so, we had a larger drawdown at 14%, whereas gold was roughly 10% or so. But this trend has also been kind of unstoppable this year. If we just kind of zoom out, look at the structural trend, it's still intact in the long term. We're still making higher highs, higher lows in price. And something I kind of drew here on the chart the other day was a possible head and shoulders or inverted head and shoulders pattern taking place really up over the 1 year daily. And if we jump down to the shorter term too, and seeing a gap above that prior resistance right around that 49.15 or so, or 49. So what are you thinking about this? Are you kind of seeing a similar thing in silver, Scott?
Yeah, not kind of. This is very much similar to what we've seen, with gold, et cetera, but very much the same. I think it's driven by very much the same crowd. I think for very much the same reasons, and all of it's intact. I think that it's all solid reasoning to be participating in these kinds of things right now. Not a recommendation, however. But again, we're not far from a recent, so we've just potentially broke, and we'll see if this confirms today, potentially broke this level of resistance that Rachel has drawn in there. The next level of resistance would be that 53.61.5. And so, as we see it approach that level, I would either look for a pullback there or maybe some consolidation again there. But once and if we see it jettison and break through that and confirm that breakout, we could potentially look for even more movement to the upside. So, this is not done potentially from a technical standpoint. We'll see how it all goes out. And look at that, Rachel. You're drawing that target. That's the move, the most recent move, and then we superimpose that on top of that break there from where it happened, semi recently. That's what we would put in as a target. And look how interesting, how symmetrical sometimes those things work out for us. But that would potentially be an area that we have interest that we would pay attention to and make decisions in between here and there accordingly.
Yeah, I would definitely agree with you. And it's just kind of funny how technical analysis and math kind of line up when we take those
Yeah.
measured moves from those patterns, and it puts us right near those all-time highs as resistance. So a couple levels for traders to watch. Great call out there, Scott. And now that we've kind of covered some things that are moving in the market, the indices, let's take a look at the sectors. I'm going to collapse that watch list and take a look at our sector watch list. So what are some of the sectors that you've been watching, Scott?
Transportation, energy, materials.
Yeah, I would definitely agree with you there. I'm going to back out to the longer term chart there. I've actually been watching energy as well. It's been one of our laggards. I mean, just in for quite some time, right? I mean,
Sure. Yeah.
energy has been one of the laggards for this year, I think even last year as well. But something interesting to me that I actually found was a little bit of a coil taking place here with this ascending triangle forming in the energy sector, which if that does break to the upside, let's kind of look at that measured move there in energy. Let's see. That was about a 5% move at the time. Okay, so now we don't have a crystal ball, but obviously Scott here. But just kind of taking that look at a measured move, if it were to break to the upside through that resistance, right around that 686 or so, that could put us right at that prior resistance up here, right around, what is that, 722, 723 or so. Anything else that you're kind of watching
No,
here?
I just have to laugh because it's interesting to me how often this happens. I'm astonished every time to different degrees, obviously, but look at that. Buyers and sellers. That's what's driving the market. And when we see buyers and sellers at certain areas, we can expect sometimes for their behaviors to be consistent with what they've done in the past. So that's a great call out right there, Rachel.
Exactly. And you know what I think is interesting too? Like when we see bull markets taking place, we obviously see a lot of rotation happening under the surface.
Yeah.
We've even seen that with this latest pullback where we haven't necessarily seen defensive rotation really at all, even though we've had a little bit of a pullback in those gap closes from those all-time highs in the indices. But you would kind of think that at some point there would be rotation into some of these lagging areas of the market too. And especially since I'll kind of back this one out even further, energy is one of those sectors that it's actually the only sector that's below its
Yeah.
I'll zoom even further out. I don't think I can zoom further out, but it is one of those sectors that is below its pre-financial crisis highs, and it's the only sector that's still kind of lagged there in the short term. So one would think traders would maybe think that if we're kind of stepping into the next phase in a bull cycle, we can anticipate even more rotation, maybe for a chance for some of those laggards to kind of catch up to those leaders.
Yep. You're right.
So let's take a look. You also mentioned materials as well. What are you seeing there in the material sector?
Seeing a little bit of a pull off. If you'll notice, that movement that kind of held there between, I don't know, July-ish and
I think Scott's having some technical difficulties here. I think he froze, so I'll just kind of continue if we kind of caught any of that. But yeah, materials as a sector has been kind of obviously been slipping off the edge, which kind of makes sense because we've had some continued pressure on precious metals, which would have been one of those areas of materials that has been outperforming for the year. I think a couple other sectors to take a look at. Healthcare has been one of those sectors that has been really, it's been a laggard over the last year, let's be honest. It's really formed, I mean, really from April to October, this really long range where we saw possible accumulation taking place because we saw just at the end of September, we saw a very strong breakout in the healthcare sector. And then we've seen a continued move from there just with this kind of rising wedge. We've even hit those overbought levels in the RSI. So one may be looking to see, could there possibly be continued rotation into this sector of healthcare? It's looking like it's possibly one of those kind of continued improving sectors, but I see Scott's back on. Scott, do you see anything in the healthcare sector?
Well, I kind of missed all that you said before, so I hope I don't repeat anything that you said here. But, this isn't surprising. Healthcare's got a lot of attention in the news lately. It's open enrollment for most places. So, these are the kinds of things when we see the moves that we're seeing in healthcare, not super surprising, just given the season. We'll see if it continues. I'm not sure everything that you talked about, Rachel, but you can see that it's moving in a solid way. We'll see if it continues with this bounce.
Exactly. So let's move to information technology. That's been one of those sectors that's been leading, obviously strong trends, strong momentum. It took a little bit of a hit. Obviously, it looks pretty much identical to some of the indices, obviously, because of their higher weighting. S&P is, what is it now, like 35% technology or so, kind of rough ballpark there. And then NASDAQ's over 50% technology. So we're kind of seeing that similar move there, but no break in the overall trend here in information technology. So wondering if it could continue to be one of those leaders in trend, momentum, and relative strength, Scott. I think we lost Scott again. So we'll just kind of move to the next sector here, utilities. This has been an interesting one that I've seen. I want to place this relative strength rather than the RSI on some of these as well. And that's kind of what a lot of traders kind of like to do when they're looking for kind of areas in the market where we're possibly seeing rotation or possibly can look for it from a top-down perspective, really look for areas of outperformance or underperformance in the market. So I placed that relative strength study below, just showing a ratio of utilities to the overall S&P 500. And it looks like throughout this time, it's been making higher lows, higher highs, just as kind of price is here. We saw a little bit of a pullback to that 50-day moving average. And then we had that big bullish engulfing candle that engulfed 1, 2, 3, 4, 5 trading sessions. And then it obviously confirmed move higher from that pattern, really trying to fiddle with the 20 period simple moving average too. So Scott, since you're back, what are you seeing in the utility sector? Is that kind of one of those sectors that you may be seeing rotation into?
Yeah, and you do. You see, can you hear me? Okay.
Yep.
You can see what you see rotation into utilities often is kind of a defensive move. So in light of everything that's happening again geopolitically and in the markets and everything else, this is not surprising. I do like from a technical standpoint again, I do like what you pointed out, how that big, huge, bullish engulfing candle engulfs. What did you say? 5 days there. We do see a little pop above that. we're just going to have to keep an eye on this. The candlesticks prior they're all part of that big move to the upside. For the most part, are pretty good sized candlesticks. When you look at the story that's being told by candlesticks of that size going into something, we know that that's just a display or an acknowledgement of a lot of enthusiasm around a particular instrument. This one, the downsized candles can also tell the same story, and we're seeing even bigger ones there. So we'll see how this all plays out, Rachel. But we're seeing some really interesting movement right here in the utility sector. Again, not surprising though.
Yeah, exactly. And it's kind of, and I guess Carol, she made a good point in the chat here too. Can someone remind me, is it utilities or energy that include power for AI? It's actually both because utilities, some of it has like uranium, nuclear, some of that can be found in the energy space as well, but a lot of like alternative sources for power and things like that can be found in utilities. But yes, that kind of remains one of those main sectors to kind of pay attention to if you're kind of looking for that type of powering for AI there. So that's possibly where we're seeing, obviously, kind of rotation or improved relative strength in utilities and possibly energy with its coils as well, because of all that AI demand and that AI boom we're seeing. There's obviously a lot of power that comes behind it. So that's why traders will probably be focusing on a couple of those sectors that we went through. Now, Scott, let's move to our analyst upgrades and downgrades. So one here that I have is Expedia. And this CICC upgraded Expedia to outperform from market perform with a $271 price target. Anything that you're seeing specifically on this chart?
Again, not super surprising. We see that consolidation run that ran there for several periods, and then a big break. That big break obviously came on an event, that event being earnings. Looks like they're going to pay a dividend here in the next little bit as well, next couple of days as well, I think, maybe a little further out than that. But when we see this kind of thing happening, this could be an indication that, hey, we've found a new level and we're going to spring up from here. Or it could mean that, hey, we found a new level. We're going to test this for a while. We'll see if it'll hold, and it may not. But this is a good move to the upside.
Yeah, obviously, I mean, powered by that breakaway gap that we saw there, where price just gapped above that old resistance. We didn't see really any profit taking place here at that first Fibonacci level, but who knows? Maybe we'll see a little bit more right at the next one, that 200% level of that initial break to the upside, right around 285. So that could kind of be a level to watch. Let's bring up another upgrade. Let's look at Eli Lilly. Now, Leerink upgraded Eli Lilly to outperform from market perform with a price target of $1,104, up from $886. Looks like the firm expects multiple waves of kind of weight loss, treatment, adoption drivers here. And yeah, it looks for those to strengthen the company's leadership position, the analyst tells investors. Now, the firm which increased its 2026 to 2020 or 2030 EPS by 4 to 9% annually, boosted its 5-year revenue compound annual growth from 12% to 15%. So given that, what are you seeing here, Scott, on the chart? Because I see a big breakout today, big breakout candle of that previous resistance there on that upgrade news.
Yeah, that is a very big break. Can you measure the percentage just on that candle for today, Rachel? That's a big move. When we see a move like that this early in the day, they they typically hold on to some of that power move to the upside. So we were at 930. We've moved $50 to the upside. $50 on a stock like this. We've got a 4.5% move already today. So keep an eye on Lilly. Lilly's been an interesting stock. Look at all those interesting dips and valleys and peaks and valleys rather and so forth. This is a drug company. Drug companies can indeed move this way. If you're going to participate in any of these pharmaceuticals, make sure you're paying attention to all of the laws and geopolitical stuff that's happening, et cetera, because that can really affect what's happening here. But we've got some really good move. And Lilly came out with some really good earnings. They had some good earnings a bit back. They had some good guidance on that. I covered that on the network when we were talking about that on this move. But they had some good guidance coming forward. They've got a lot of great things, according to them, not according to me. According to them, they've got a lot of great things coming down the pike that could potentially be the impetus behind some of the move to the upside that we're seeing here, Rachel. So interesting stock. This is a fun one to watch. Not a recommendation, but again, they've got a lot of great stuff that's been happening lately.
Yeah, I definitely agree with you there, especially, and it looks like on even the longer term chart, it's making
Yeah.
new all-time highs there on a weekly basis. Obviously, the weekly candle isn't over yet, but yeah, it led by multiple things. Obviously, those weight loss drugs, type 2
Yeah.
diabetes drugs are going to be huge for that space, and then that expanded Medicare, Medicaid access by 2027 may be contributing to that also. Let's look at a couple downgrades before, since we have just a couple minutes left. So let's look at JD. JD here, it looks like Morgan Stanley downgraded JD to underweight from equal weight with a $28 price target. The firm views JD as the worst positioned Chinese e-commerce stock over the next 12 months. Company's revenue growth will significantly slow and its margins will erode due to easing trade-in effects and investments in new business, the analyst tells investors in a research note. Morgan Stanley believes these are weakening JD's ability to improve shareholder returns. And this is kind of following that story. I mean, they put their price target right below those lows of support that we're seeing there. We're obviously seeing that decline in relative strength versus the overall market. Maybe that longer term descending triangle taking place. So that price target seems kind of right in line with kind of what we're seeing on the chart there, Scott. And
Yeah,
then,
exactly.
and then let me move to the last downgrade that we're going to cover today, CarMax. So let's look at Morgan Stanley downgraded CarMax to equal weight from overweight with a price target of 35, down from 56. Pre-announcement of the deterioration in volume growth and degradation in execution and uncertainty around new leadership likely leave shares range bound until investors can build confidence in the new CEO and transformation strategy, the analyst tells investors. So anything that really stands out to you on this chart of CarMax, Scott?
CarMax has been really struggling for most of the year. So, this isn't just about what's happening in the market in general. This could be management issues. This could be all kinds of things, that we're potentially looking at here. But, if you start at the beginning of the year and move it down to where we are today, CarMax is down over 50%. And so, we'll just have to kind of see how this plays out. But obviously, a stock that's been in a little bit of trouble. If it's going to make some moves to the upside, it's got quite a ways to go.
Yeah, I would definitely agree with you there. I saw a couple comments in the chat too about putting volume on the chart. Hopefully you guys saw where I just did that as well. Obviously, we had big spikes in volume there with those lows being made there. And then I also see a couple comments about your background, Scott. It looks like you really like your Western theme back there.
Yes,
Scott
it's not a theme. It's a
cowboy.
lifestyle. Yeah, it's legit, gang. It's legit. But most know, but I'm a professional horse trainer, not for a living. I do this for a living. I train horses professionally on the side, but yeah, that's it.
Yeah, and I will add to his kind of Western theme there. Many of you may not, like, if you watch Yellowstone, you may not know, but Scott was actually in the show Yellowstone. So that could be a recommendation for us today to watch that and look for Scott in Yellowstone. They're a real cowboy here that we have. But Scott, thank you so much for just kind of this discussion today. Obviously, we took a look at many different things in the market. Thank you, Brent, and everyone in the chat for just your engagement and interaction today. Please like this video. Please follow us on X. And please like and subscribe to our Trader Talks channel on YouTube. It'll help your algorithm with you traders out there. But thank you again for all your time today. And I know Kevin and others will catch you the rest of this week on Trader Talks.